We're still watching Business Nigeria, and we're still talking about the implication of President Donald Trump's tariff plan on the global economy. Now we're focusing on the crude oil market. Well, oil prices has experienced a significant drop, with West Texas Intermediate crude momentarily falling below $60 per barrel, but rebounds to $60.91 per barrel today. President Trump's recent tariff announcements have sparked fears of a global recession and reduced trade activity, negatively impacting oil demand. Analysts warn that escalated trade disputes could lead to industrial slowdowns and further depress oil consumption, potentially pushing prices even lower. Our Vice Chairman, African Energy Council, Dr. Chinan Dikwal, is here to talk more about the crude oil market outlook amid Donald Trump's tariff. It's good to have you join us on the program.
Hi there. Yeah, pleasure to be here.
Well, we've talked about the second coming of President Donald Trump, and since the first day he got into the White House, we've been seeing economic policies being rolled out, some policies not going down well with the global market. But let me get your thoughts first about his policy on the oil market, the impact of his policy on the oil market, and we see the crude already dropping prices, although we saw a 1% rebound today. But really, what's your take on this development?
I think, well, there are a couple of things, right? One is Donald Trump ran on a very clear agenda. It's real honest. I think I was listening to the guest before. He ran a very clear agenda, and that's he wants to drop the oil price very significantly. He wants to tame inflation, in a way that is never seen before. He wants to return, sort of capital to the middle class and all of that. Now, particularly to the oil market, these are very clear mandates. In fact, he ran a whole mantra of drill, baby, drill, meaning he wants to increase U.S. production over and above what we have today. For context, today, the highest crude oil producer is the U.S. anyway. But Donald Trump was still saying drill, baby, drill to increase more. So that was the context that many people understood it. That this president is coming, he's going to reform business, he's going to run things on, he's going to increase, crude oil production for the U.S. Nobody actually thought he would make true his threat around tariffs. And that's what he's done. The guy has come in and he's slapped all these tariffs around, on everyone. What's interesting? The unintended consequence of having a low oil price has been achieved. The low oil price initially, based on how we understood it, was that the U.S. will produce more crude oil, supply that exceeds demand, and the price of oil comes down. But today, based on the policy around tariffs, he has succeeded in this trade war in causing a lot of uncertainty in the environment, and that's dropping the oil price very significantly. So, to be honest, I think for lots of analysts, the unintended consequence has now been achieved. We are in a low oil price scenario right now, and the downside risk, I think, is even much higher than we've ever seen before. There's a huge possibility prices could go down even lower than we have seen before. And I think this whole thing around trade is a real biggie, and many people haven't wrapped their head around it.
Well, of course, this is not good news for us. It's not really good news for us as Nigerians, because we think that it might affect our budget projections if we fail to ramp up production, considering the challenges around that space.
150%. 150%. Actually, I'll just make this point. Last year, when I looked at the appropriation of the budget last year, we made the projection. So, finance minister, it made the projection based on a $75 per barrel oil price for, average for the whole year. Honestly, last year was a bit challenged because we couldn't implement that budget because oil did not stay above $75 per barrel all through. The average price was much lower in the year. That was why we had to go for a supplementary, so budget to kind of print, you have to finance the budget. Unfortunately, this year, I think we are probably in a worse enough. I don't understand, with all due respect, how it is that we're still forecasting $75 for the oil price of this year, 2 million production, when actually today, as I speak, we're about, you can argue, we are about 1.8. When I say 1.8, it's 1.8 million barrels, 1.8 million barrels, which is crude oil plus condensate, 1.8. In actual fact, crude oil alone is not 100%. But in the budget, we're saying 2 million barrels per day. We're not quite there. Now, I fully appreciate President Bola Ahmed Tinubu is really Friday, and you can see that with the announcement last week. He's brought the A-team of the oil and gas industry to try to jumpstart production and, put us down towards that 2 million barrels per day. We're not there. But the budget for 2025, which is, I think, about 55 trillion naira, translating to about 32 billion USD, something of that sort, the whole of that budget, the financing of that budget is based on an oil price scenario of $75 per barrel. You've just said it just now. We have Brent crude oil price at $64 per barrel. So you can see the delta there already. We're faltering a couple of months into the year. So I do think, actually, that this year would really struggle to implement and finance the budget. It's very possible that we'd have to go to the market to raise capital, maybe perhaps have a supplementary budget to run it. But I think this leads to the broader question around planning. How is it that we sit down to do this forecasting and planning? Or maybe it leads to a broad question around cost efficiency. Are there ways that we can cut down our costs, to make it much leaner, so that we can finance the budget much, much easier? But without a doubt, I'll say there's huge uncertainty in the economy right now. There's a huge downside risk on the price of crude oil. Some analysts are forecasting $55 per barrel in a very short space of time, so the next few months coming up. And honestly, I will not be surprised, because with all due respect, Donald Trump is running a script here. There's no question about it. But he's using tariffs as an instrument to drop the oil price. That has happened. He's now currently, from what we heard yesterday, negotiating with Iran around their nuclear deal. What does that mean? If he's negotiating with Iran, that means that there will be some sort of an agreement in terms of the nuclear program. If an agreement is struck, you can be guaranteed that volumes from Iran will come back onto the market. Iran is under a lot of sanctions today as we speak. But if there's a deal, that means that they will be allowed to put crude oil barrels onto the market. Crude oil onto the market means that there will be an oversupply of crude oil. Oversupply means price will drop again. Now, the other counterpart to that, of course, is the US has not even started to put its barrels into. So I think with all due respect, it's very possible that we could see a situation where oil goes down to $55 per barrel. And to just put this out again, OPEC had made it very clear that they would start to put down more barrels onto the market based on the cuts that they'd done before. So I don't want to paint a gloomy picture. That's not the point. The point I'm trying to make is we need to be very realistic, that we just had a budget that was presented to on the 28th of February, which I think the president, but I suspect that where we are right now, it's looking very likely that we may not be able to finance this budget at the moment.
So just listening to you, I'm like, oh my God, what did we get ourselves into? And I'm just thinking, like, so are there potential opportunities for us? Or is it just going to be a gloomy picture all the way down till we see how Donald Trump's tariff will stabilize the market, or we see some kind of savior from any country come save the global market or the oil market? What's going to happen? What do you think is going to happen?
I think there are lots of positives that we can take away from it. I think your guest before was speaking about some of these positives. I think fundamentally what this does is, because there's a huge ending of the global system, the global economy, as it were, I think there's a huge opportunity right now for Nigeria to start to look at the market and see what kind of structural alliances it can move, what opportunities it can capitalize on. So he made reference to the African Union. Could we start to regionally integrate? Could we start to regionally integrate instead of putting all of the diamonds from Botswana, all the way to the US to sell there? Is it possible that we can sell it regionally within Africa instead of putting all of those cocoa and shipping it out? Are there opportunities for us to sell within each other and trade and integrate in a more intimate way? I think these are the opportunities that people need to start to look at. Are there opportunities to look at other markets outside of the US? Because so far, we depend a lot on the US for trade. To give an example, Lesotho had about 47% tariff imposed on them. 47%. The value of that 47% tariff would impact their economy, their GDP, about 10%. So it's not a small number. Yes, Lesotho is a small country, and that's the reality of it. But when you look at it politically, many of these countries will struggle. When you have 20% levy on the price of your goods, you can't compete. It becomes really impossible. And with that happening, that means that the demand for your products drops. If demand for your products drop, that means clear unemployment wherever you are, because those factories will not be open.
Well, moving forward, do you think the price of gas will follow the same trend if the situation, of course, remains the same?
I think the price of gas, so just for context here, crude oil price is, it's a global one. It's a global benchmark, global markets, right? Talk about Brent and WTI. So those are global. They are highly connected, and you can see that when something happens. Gas prices are a lot more regional. So you talk about the Henry Hub, the US and others. So a lot more regional. But without doubt, if this carries on, anything related to energy will see an impact on the price. Why so? The reality of it is, if this tariffs continue, so just for context, Donald Trump levied 34% tariffs on China on Liberation Day, 2nd of April. Okay, China have retaliated with 34% tariff on the US. That's very clear. Donald Trump yesterday is threatening to put an additional 50% on China. Now, the point I'm making here is, with this trade war, global trade stalls. If global trade stalls, then ultimately consumer spending stops as well, because many people don't have confidence in global economy, but also if you're working, companies can seem to cut back. If that starts to happen, then the global economy is likely to go into a recession. Now, in a recessionary environment, and that's what you're seeing with the oil price, many people understand that if we are in a recession, many people will not be driving their cars, lockdown and all of that stuff. If you live in the UK or live in the West, you start cutting back on your heating and cooling costs and all of that. So without a doubt, gas will be impacted, because much around the world, heating and cooling and refrigeration, all of that stuff is run by. So if we are in a recession, if we get into a recession, then without a doubt, expect to see a hit on gas. And a country like Nigeria exports LNG, liquefied natural gas. There will be a huge impact again. And I'll say this, it's not even just that we deal with. There's also a challenge we're seeing in the Niger Delta right now, where gas pipelines are being blown up. So there's already challenges that we're dealing with. So to give context, actually, just real quick, I think, sort of 6 weeks ago, only 2 LNG trains in Nigeria are operating out of 7 trains, because of several and different challenges here and there. So if this continues and then you start to have, tariffs imposed and a recession, I think you present a very dear situation.
And, just before you talked about Nigeria, I was going to just say, let's bring it home a bit. I talk about the issue of energy security, which, is still a work in progress. We have the NNPCL on one end, we have Dangote on another end, talking about the Naira to crude deal. How do you react to this? And in my head, I'm just like, oh my God, like, what do we get to do? How do we get ourselves out of this quagmire, really?
I suppose the good thing, the silver lining here is, in a situation like this, as we find ourselves, is actually really positive for, refining. Because crude oil is really cheap, talking $60, $64 per barrel today, Brent price. So if you're buying crude oil, so I'm making the point here around the Naira crude deal that's been suspended right now, and it's negotiation. So if you are a refiner and you're procuring crude from outside, then it's advantage you. You're procuring at a massive discount because the price is low right now. So that's that positive. And I can imagine that, that translates to the pump for many people. But the reality of it is, where we are today, the Naira to crude deal that we saw before, the first contract was for 6 months. Federal government signed with Dangote for 6 months just to functionalize it and kind of pilot and see how it worked. It was really successful. Much of the queues that we saw were off. In fact, many of the queues that we used to see during the festive season were all eliminated. The price of crude oil dropped, the pump dropped very significantly. I think in some cases up to 70 Naira, in some cases, it dropped. It came down to, we saw 860 Naira per litre being sold, several places, in Lagos and around the world. So all of these things really worked. The trial period was really successful. What I think is a shame right now is where we are with this negotiation. But I think another silver lining is the fact that President Bola Ahmed Tinubu has just appointed an A team, probably the most sophisticated oil and gas team that we have seen, the NNPC board that we've ever seen before, full of technocrats, huge experience. I think at the African Energy Council, we did a calculation, about 260 years of total experience that these people have, and across the board, stream, downstream, midstream, LNG, huge amount of experience. We're hoping that these gentlemen and the lady would have the ability to bring people around the table and see the advantages of kickstarting this Naira to crude deal, and sort of smoothing all of the challenges that we're seeing currently.
Yeah, we're just hoping they have the magic wand or the right policies that will change the market for us. Dr. Chinan Dikwal, Vice Chairman, African Energy Council, thank you so much for sharing your thoughts with us.
Yeah, thank you.
Well, it's now time to review trading activities at the Nigerian Exchange Limited. And with me in the studio, of course, is market editor. That's for TVC News.